Hey everybody, this is John and welcome to the free video. For today, of course, all eyes were on the NASDAQ and Apple after earnings. The NASDAQ ended up kind of eking out a gain on the day after a little bit of weakness. Keep in mind that this was even with Apple being strong on the day. They had positive earnings. They had an expected move of $10, so the fact that they were only at 5 basically means that they met expectations but could not exceed the expectations of the market. Facebook also had a $10 expected move, and you can see that this fared worse, where it gapped up and then ultimately is pretty close to filling its gap and may fill that gap tomorrow. Of course, at this point, the main thing to keep in mind is that bonds are moving much higher, okay, and it's very difficult for bonds to move higher and stocks to move higher together. The bond market is a much bigger market than stocks. Typically that will dominate. But of course tomorrow we do have the employment numbers, and this is one of the biggest numbers each month, and a lot of eyes are on that. So it's kind of like, okay, well, if the U.S. economy is doing really, really strong and they add a lot of jobs, that's good news, but then is that bad news because it means they're going to stop cutting rates, right, and vice versa. So tomorrow will be an interesting number. And then keep in mind that we've got a new month, and a new month, typically the first 3 days see the most action, okay, and that could be selling or buying. It just depends kind of how asset allocation is going. What I mean by that is all these funds sit there at the end of the month and say, okay, we want to be 68% stocks, 22% bonds, and the rest metals. And at the end of a month, if that changes, meaning if stocks go up and bonds go down and gold goes down, their percentages are off. So, now they've got too much, they own too many stocks. So they may have to sell stocks and buy bonds just to even that out. All right. So some weird stuff happens the first couple of days. So my plan going in tomorrow is to be fairly light, and into the weekend is pretty light, and maybe throw on a few long strangles, okay, or straddles. In the premium video, I'm going to talk about how I set up a hedge trade using, like, say, S&P futures and then options on futures, so I can make a big directional trade but then sleep at night, because I know that if it doesn't work, I'm not going to get kicked in the teeth. All right. One of the biggest questions I've been getting in this market, especially because the markets have been pretty crazy, is just how to time the moves. All right. And so here's a good example. Here's a stock where it's trending higher, it's trending higher, it's trending higher, and then crashes. Well, if you're familiar with what's called the Moxie tool, what this is a textbook inverse trampoline move, where we break through here, we kind of come back up, get rejected, and then when you get this next downturn right here, what you're looking for is for this entire thing to collapse. And indeed it does very quickly. I mean, the stock falls, nearly 25, 41, 31, 20, yeah, $20 in, a matter of a day and a half. I mean, pretty amazing. So what is this? I don't know if some of you have heard of this. Some of you have already heard of it. I think a lot of you haven't. So TG, he's new with us. He's been trading for almost 6 years now. Classic kind of engineer, pilot, and is looking for precision. It's like, I am not trading unless I've got precision. And so the Moxie tool indicator is a result of that desire. And what's been great about this is that it's something that I like to use with the squeeze, because it'll show those, especially those divergences, and like that one I just saw you, it kind of gives you a heads up as to which way the squeeze is going to fire. And it's from a totally different perspective than I've ever seen before. And it's also good as a standalone tool as well. So if you're interested in checking this out, you can go to simplertrading.com/stocks. And he has a class coming up for $497. All right, you'll get the actual strategy class and how he uses it, as well as the Moxie indicator itself, and he's developed scans that you can use within Thinkorswim. And then, of course, I always think it's a good idea to spend some time live trading with the person who is showing you the ropes. And in this case, for $697, you get all of that plus 3 days of live trading. So if you're seeing this, this is a fantastic deal to get set up with. Again, if you're into precision, like no questions asked, what do I do? Right? Tell me should I go long or short, and when I get out. TG, from an engineer and pilot perspective, has put together a system that answers that question. So it's pretty fascinating. And it's always fun kind of looking at different perspectives that come in, and especially when you get someone that's this precise. It's just like, there's no room for interpretation, so to speak. So I think it's something that you'll really enjoy. And again, that is coming up on November 2nd, which is this Saturday. So right after the Halloween coma settles in, and then there'll be live trading on the 4th, 7th, and 12th. All right? Should be an awesome class. And TG, also looking forward to those precise rules that you put together for this. I always think it's great when you get someone, especially from an engineering background and a pilot background, where you've got the safety checklist before you do anything. That's really what he's brought to trading. So it's pretty phenomenal. All right, that's what we got. Have a happy Halloween, and we'll see you at the next update.